Good afternoon, traders. Good afternoon. My name is Raul Rivera. Today is Friday, August 4th, 2017. And let's give a shout out to a wonderful jobs report. I believe we had 209,000 new jobs created. We were expecting about 166,000. But I guess it wasn't enough to take us to new all-time highs. So let's get started with our review of the profile. So today the plan was pretty simple. We wanted to get long at all costs, especially in the indices. I managed to catch one trade in the S&P 500, but as you can see, the profile in the S&P just didn't do much today. It just kind of remained sort of sideways. Let's get a little FaceTime here. Let me turn on the webcam. There we go. Ooh, I look good. Okay, so today in the S&P, we were consolidating mostly. Coming into the day, we were not trading inside yesterday's range, so we did not have an inside day. And we had a D-shaped distribution most of the session. As you can see, the characteristics of a D-shaped distribution are, about an even number of distribution above and below the open. So here's where we opened. We have distribution above and distribution below, and it's in an even kind of mode, right? When we have B shapes and P shapes, here we have a P shape. The characteristic suggests on a P shape is that the higher bulk of distribution should be well above the open, and here we can see that the larger bulk, yes, is above the open. This distribution well above the open here. So today we had a D, right? A lot of consolidation, a lot of nothing going on, but I will leave you with this. This is pretty interesting. We were just taking a look at this in the live trading room, and the interesting part is the 50 to 2,000 lot trader, or pretty much the institutions. Look at what they're doing right now at the end of the day. They bought big. I mean, we were hanging out around 4,000 positive imbalance between the 50 to 2,000 lot trader. And what we have right at the close, over 10,000. So they're buying into the weekend. I expect us to trade to brand new all-time highs next week and continue the grind to the upside. So this little sideways trading pause that we've had for 1, 2, 3, 4, 5, 6, 7 days, I think comes to an end, and we continue the trend to the upside. These guys are never wrong. Okay, these guys don't like to lose. They have better information than we do. They have deeper pockets than we do. And we want to trade with them, not against them. So next week, I already have a bias. I want to be long. Okay, I'm going to try and get long by any means necessary the S&P 500, because this market is just going to continue to go higher. I wouldn't go out on a limb here and say that we hit 2,500. I'm not there just yet. I want to see how we do at 24.95. But that's the next logical position in the S&P, right? That's the next logical place for the S&P to go. Switching over to hybrid view, let me show you guys my one trade. So today we wanted to play the trend strategy. Pretty simple, pretty easy. We knew we were going to trend to the upside, so we wanted to buy the market, and we wanted to buy it early. So we waited for a pullback down to VWAP and TWAP. Okay, VWAP and TWAP, and we bought here around 72 and also at 24.70. 24.70 happened to be the open session low. Okay, not the low of the day, but the low of the open session. I just want to show you guys my fills here. Try to be as transparent as possible. So here we can see I got long 71.75. 3 contracts at 71.75 right here, right at the TWAP. And then I added two more contracts here at 24.70. So pretty accurate to catching the low here. And so this brought my balance up to, I believe, 71, 24.71. My average, my cost average. If I buy at 71.75 and I buy more at lower prices, my cost average lowers, right? It's just a simple average formula. This trade plus this trade plus this trade divided by this equals the average, right? Actually, we have 3 here, so this should be a 3, right? So 3 trades, blah, 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 a little bit of math. You get a cost average of 24.71. And I actually closed the position here at 24.72. Why did I do that if everything was looking good? Well, when we take a look at the footprint, all we got to do is zoom in with our software and voila. So there's our footprint technology. And as you can see, with a closer look, we saw pretty big selling come in from the institutions. So as you can see on this bar, the one that I sold at, right, we can see these yellow highlighted areas. So what are those? This is where the institutions came in and started selling pretty large size. We highlight these areas in yellow and in blue. In blue means that large institutions were buying at these specific prices, and yellow means that they were selling. So we see a lot of selling from the institutions. We take a look lower. We were around negative, we closed this bar negative 3,700 in balance. We were right around that area with more sellers than buyers. And when we take a look at the 50 to 2,000 lot traders, we saw that they were selling. So all of this combined together, we had at least a profit of 4.25 points at the highs here, but out of nowhere we got quite a bit of selling, and I figured, what, I'll get out of this position now before it goes against me. And good thing I did. For the rest of the day, the market just really did nothing. So this was an excellent trade placement right there, using our trend strategy, by getting long at VWAP or TWAP, and then just smart thinking. We're able to see what the institutions are doing. We're able to see what the order flow is telling us, and they were telling us that, hey, somebody's in here selling big. You might want to get out because we might just reverse to the downside. You never know. So I got out for 1 point profit here in the S&P. That's about $250. So not too bad, for 5 contracts. Okay, taking a look at crude oil. We came in here with a bias that we wanted to sell rather than buy, and we were looking to sell 25 to 35. We were looking to sell 25 to 35. If the buy side, if the market sold off enough, we wanted to be buying 48, 20 to 30, 20 to 30, and then if this level failed, which it did, we wanted to start selling 70 to 80. Okay, wanted to start selling 70 to 80 if this level failed, and it did. And this was one of my losing trades. So I had 2 losing trades, 3 winning trades. Ended the day positive. I'll show you guys my P&L towards the end of the video. Again, let me just be as transparent as I can here. Show you guys my fills. The reason I take away the text and markers is because it gets a little bit cluttered. See, here's a good example right there. So you see the buy orders and the sell orders. It gets pretty cluttered and it is too noisy. I kind of like the cleanliness without those texts and without the text and markers. But just to show you guys my fills, I'll turn those on. So we came in wanting to be sellers, and we got filled on our sell limit orders. Okay, 3 contracts. My first contract, 49.25, 49.30, 49.35. Take the average, and it's the middle one, right? 49.30 was my cost average on this trade, and I ended up stopping myself out at 49.53. So why did I do that? Let's switch it over to hybrid beta. And let's zoom it in a little bit. Okay, so the market came up, perfectly placed trades here. As you can see, there was a tail. So we knew that there was definitely some resistance here. And the trade did work out for at least, I believe, 15 ticks at most. So I know a lot of traders that only want to take 10 ticks on every trade. This trade would have worked out. But me, you know, I'm addicted to the big moves. Okay, I'm addicted to these large swings. So 15 ticks is just not enough for me. I wanted to take one target out at 49, to the buck, right? 49 flat. And that would have been 30 ticks, right? One contract at 30 ticks, and then try to sell at the low of the day. But the market wanted to trend today, so we were a little bit off with our order placement. But it happens, right? Sometimes we take some losers, sometimes we win. It's called trading, right? Sometimes it just happens. It's how we manage our positions that make us successful. So today I had 2 losing trades and 3 winning trades. You know, I ended up making money. But I've had days where I have 3 losing trades and 1 winning trade, and I still make money. It's all about managing your risk. And here on this second bar, we started seeing the market move higher, and I'm just like, okay. So we're seeing a little bit of selling from the 20 lots and greater. We're seeing some pretty weak buying, and at the time we had like positive 400 imbalance. So we were thinking, okay, so it could sell, but if it doesn't, you know, I have 3 contracts. That's pretty high leverage, right? That's $30 every tick that the crude oil market goes up or it goes down. I'm making or losing $30 every single penny. So the leverage is pretty big. So we were looking to sell 70 to 80. So I figured, you know what? I don't want to risk 3 contracts from 30 all the way to 75. Okay, that's a ridiculous amount of potential loss. And so what I did was I said, I'm going to stop myself out. I'm going to put my stop loss here at 53. I'll be losing 23 ticks. And I'll try to re-enter 70 to 80. That way, if I do get filled up here and we do trade lower, I'll be able to recover my losses faster. But as you can see, we didn't quite get there. So I took a loss here of $690, right? 23 ticks, 23 times 30. That's 690. So that was my loss here on this trade. We never got to 70. So I was never able to re-enter. So I canceled my orders, and we scratched it, and you know, we're gonna move on from it. But that was the idea, right? It wasn't a bad idea, but it didn't work out, and that's trading, right? That's trading. Okay, looking at gold, this was the biggest winner of the day, dollar wise. So early this morning, before the non-farm payrolls came out, we took a look at specific few levels that we were interested in buying and interested in selling. We weren't really actually looking to sell, so this was out of the question. We didn't have enough overhead resistance, and from experience, I know that gold tends to rally 10 points plus or sell off 10 points minus, right? So before the non-farm payrolls, we were trading around 74, 73. And so I figured I'm not going to use these levels of, you know, support and resistance based on the value areas. I'm actually going to go back in time a little further, and I want to see where support and resistance lies 10 points under the market. So I scrunch over and I figured, okay, so 74 to 64, we split distributions, and this is the most recent in the market's memory right there, this value area here. So that's where I started placing my orders. 62 to 60 is where I wanted to get filled, and I mean, lo and behold, catching the low of the day. As subscribers of the room, you would have gotten into this trade, and we would have all made money together. So looking at gold, let's split it. So we have a D followed by a B, definitely trending down pattern. We could even split it here, and it'll give us a more detailed view. We have a D followed by a B followed by a B, so we're definitely selling. And somehow, some way, Raul, me, makes money on a trending down pattern, which is, it's pretty incredible what the market profile can do. We can trade sell-offs to the long side. We can sell rallies to the downside. It all depends on what strategy you decide to apply, and executing and managing the trade accordingly. So looking at the hybrid view, and also let me again display my fills so I could be as transparent as possible with all of you, because I don't play around. I don't play. Okay, so here we can see our fills. So I had an order at 62, 61, and 60. Take the average. What's the average? It's 61. So I was long 3 contracts at 1261, and I had a target at VWAP, which was at first 69, then 68, and now all the way down to 66. But I got out of this trade, as you can see, at 64.80. So how did I do it? Again, using the market profile. Join us in the room for a free 14-day trial. You won't be sorry, and you'll see firsthand how we pick out these levels live in the room. And we do this very early in the morning as well, so we know exactly what we want to trade, well in advance and well before the market gets to those areas. So we don't chase the market. We let the market chase us, okay? We let the market come to us. And that's how we can execute these amazing trades. Catching the low of the day on a day where we sold off over 10 points, that's pretty incredible. So as you can see, we entered this area 1261 for 3 contracts. We had to wait all day long, and with the backing here of some follow-through buying with these 2 green bars, a little bit of selling, and then buying, a little bit of selling, more buying, some selling, more buying, more selling, more buying. So we knew we wanted to stay long for as long as we could, and so I hit this trade here at 64.80. So that's 61 to 64.80. That's 3.8 points, $380 per one lot. I have 3 of them. Do the math. This was $1,140 of profit on just 3 contracts, making 3.8 points. It's not too bad. Not too bad. Pretty decent trading, again, using the market profile and letting the market come to me. Okay, looking at the 30-year, this one was, I probably should have left it on. I haven't been doing too good with the 30-year. I don't read it properly, or it makes me scared. I don't know why. So we wanted to get long this area here, again, well before the market, the NFP came out. And so we got long, we placed our limit order. I just wanted to be exposed to 1 contract. 50 to 2,000 lot traders just selling the crap out of this, negative 12,000 in balance. I didn't want to be a part of it anymore, so I got out at 53.25 after buying in at 54.02. So I lost about 280 something dollars on this trade. And as you can see, we actually closed at 4 p.m. The market's still open, but we're at 4 p.m. we're at 54.06. So we found this area, traded a little bit, and then consolidated right around the level that I wanted and bought. So again, just the accuracy of the market profile. And now to the darling of today's trade. So I don't necessarily trade the Nasdaq, but I've actually found it to be quite rewarding to trade the Nasdaq. I've been doing pretty well, so I'm gonna probably press this one tomorrow on Friday. Um, so today we established our inside day trade. So we took a look, and when it was all said and done early this morning, we were still trading inside yesterday's range. So we said, okay, non-farm payrolls, we want to get long, but we want to get long on an inside day below value, especially at the low of the day. So that's what we went for. We found a couple of areas where we had value area low support, and I mean, we executed very well here. Um, during B period. So B period is 9:30. So B period is the open. And at the open, we went as high as 9:10. And then from 10 to 10 to 10:30, which is C period, we went all the way down and we hit our limit order here at 58.74. 58.74. We only went long one contract, but look at where we sold it. 58.94.75. This was a 20-point winner. Now it's only one contract, so the total came out to about $400. But I've been trading the Nasdaq pretty well lately, so I'm gonna press the issue. I'm gonna continue to trade, but as you can see, it doesn't matter what market you throw at me. I will tell you where the low and the high of the day is, and I will show you how I come up with those specific levels using the market profile. My room isn't just watch Raul trade. It's also learn how to trade like me and get that one-on-one time with me throughout the day, where you could ask me questions. I like it when people engage. It's almost like we're having a conversation back and forth. I like people's opinions, and no lie, it was because of one of our members. He told me, he's like, Raul, keep looking at the Nasdaq. Keep looking at the Nasdaq. So I kept trading and trading the Nasdaq, and now I kind of like the Nasdaq. It's been behaving a little better than the S&P. So we tried selling it. Ooh, I still have the order. We tried selling it at 35.75. We were pretty adventurous trying to go for 60 points, which could have happened if the market decided to trend. But the market didn't trend. We just continued consolidating. So again, on the Nasdaq, D-shaped distribution here, executing perfectly, buying the low of the day at single prints, using our inside day strategy, and taking 20 points. Now we actually had about 30 points, actually 32 points, about 32 points at the high up here. You can see letter E. It's very small, but you can see it right there, letter E. But I was expecting the 60 points. We traded lower, and I said, you know what, I'll settle for 20. Get me out of the market. So that's it. That was my trading here. So P&L, let me show you guys. So let me pull up my control center. Oh my God, this always happens. So with NinjaTrader, at 4:30 it just recalculates. So let me pull up my trade performance. So this is all the trading I did today. If I could hit generate so that it updates on the sales that I did. Let's go to the summary. And so this is today, right? 8484. We can see total net profit here, $755.85. That's after commissions. Okay, that's one nice thing about NinjaTrader. It calculates commissions. So that's pretty cool. So 755.85 after commissions. We can see it says 13 trades, but that's not true. I only took 1, 2, 3, 4, 5 trades. But I got multiple fills, which is why it says 13. So percent profitability about 69%. And the rest of the statistics really don't matter unless you're running an algorithm and you need to optimize your algo. So all that I care about is total net profit. So on the long trades, I made out pretty good. On the short trades, which this was pretty much crude oil here, I didn't do so good. So there's my net profitability for the day. Alrighty guys, I hope you all enjoyed this video. Swing by the room, guys. www.themarketprofile.com. Claim your 14-day free trial and watch me trade. And let me teach you how to trade, how to use the market profile. So sign up, claim your 14-day free trial, and you know, I hope to see you on Monday. So with that said, I hope everybody has a great weekend, and I'll see you guys on Monday. Thanks, guys.